You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Hello and welcome, everyone. Welcome to the China Shop. Get your asses inside. We got another exciting guest interview today. I'm Shopkeeper Dan. With me, as always, is Kyle, creator of financialineptitude.com. How are you doing today, Kyle?
I'm good. How are you? Excited to be back from your trip from Ireland?
I am.
This is your first recording, right? Since you came back?
It is. I only looked at the charts a couple times to go, oh, I'm missing a big sell-off. Damn. Could really be cleaning up on the puts. But yeah. This is the first job I've had where I'm like, okay, sweet, back to work.
Hey, it's Monday. All right.
It's fucking Monday, yeah. Let's get it.
Who do we got today?
We are joined today by none other than Matthew Murawski over at Goodstein Wealth Management. How are you doing today, Matthew?
Oh, man, I couldn't be better. I'm happy to be here and talk shop with you guys for a little bit.
Well, why don't you tell us a little bit about your background in getting into finance and how you became a financial advisor?
Yeah, sure. I talking about book ideas, I actually think my story is actually pretty cool for people that are in finance, because I did not get into this business the way 99% of everybody else that does this, that's roughly my age.
How do they get in?
Yeah, they start at, one of the big firms, or they started an RIA, and they're basically handed some small clients, or the annoying clients, and then they basically do all the schlep work for the lead advisor, and then they grow a business on the side, and they either leave or whatever, or the people that start at like the big firms, if you start at, I won't name them, I don't want to get sued by anybody, but basically you go in and you're like, oh, I'm going to be a financial advisor or planner, and you go in, they're like, oh, let me see your phone book, call all of your family and friends, and now to sell them life insurance. And so, like, literally, that's how most people start.
It sounds like an awful path in.
Yeah.
It sounds. It sounds horrendous. So I'm from Ohio, and the reason that's important is I moved across the country with $300 in my pocket. My Dodge Neon I had rebuilt because I was a mechanic back there while I put myself through school. And I started up in the Bay Area, and literally at 20 got a job because I was supposed to go work for the Gap in marketing, and got hit by a car. My bike broke my arm, and that never happened. I never made it across the ferry to San Francisco, and I got a job answering the phones at a investor relations firm that also did some VC stuff. And basically, I walked in and I saw these guys on with the screen, the big fancy screens and tickers. I didn't know anything about anything, and I just got I said, listen, I got a broken collarbone on my right arm, but I just answer phones on my left arm. I answered phones and got to talking to people, and I just was I was in love. I wanted to learn everything about. There was some like ex traders out there that worked on the floor and stuff, and it was like a 15-person firm, and I did that for a few years and worked my way up to a vice president in that firm up in Novato, and just realized, man, I really hate this. And like the money and like the fancy Wall Street lifestyle of the jets and the stupid parties and the ridiculous cars. Yeah. Like,
oh God.
Listen, those were like the perks, but I wasn't happy and I couldn't quite figure it out. And I realized we weren't really helping anybody. We weren't really creating anything. And so I literally, and I didn't like some of the things that the owner of the firm did not mix with my ethics. That's a whole nother long conversation. Luckily he's dead, or I could get sued.
Right.
So I just one day I just moved. It was 2010 that I just moved down to. I decided, like, hey, I'm gonna start over. I'm gonna move down to Los Angeles and start over. And if I hate it there, it was either here in New York. And I was like, but it's warm down there. And I came down here, and I didn't want to get a real job. I had a bunch of money saved, and so I started teaching rowing out in the marina. because I was a rower in high school and college and coach. And so I eventually took out this really annoying paralegal one day because she was just talking, like saying all these things about rowing. I was like, you don't know what you're talking about. I was like, let me take you out. So I took this lady out. We had out in the ocean right outside of Santa Monica for 2.5 hours, and we had fantastic conversation. She said, hey, you should, I was kind of trying to figure out what I wanted to do next. She's like, you should meet my friend Alan. He's a financial planner. He has his own firm, own RIA, and he's looking for someone just like you. So that he can travel and then one day, basically, have a succession plan. I thought, oh my God, I hit the jackpot. This sounds awesome. So basically, the moral of that story is only by going back to my roots and doing something I knew I really loved, which is rowing, was the reason I found my partner today. So I'm on the succession plan. I started with him. I wasn't given any clients, wasn't given any book. I had to teach fitness classes. I had to repair rowing machines. You wouldn't believe the amount of manual labor I've done to build a book of business. And luckily, thank God, all that's in the past, because it was brutally hard to do. And so he said, hey, listen, if you join me, I'll teach you. He's about twice my age. He's in his mid-60s. If you do right by the client, you're going to be more successful than I am. You'll have a bigger book than I am, and I was like, at the time, I was like, geez, I have zero assets. I have zero clients. Where do you, okay, sure, whatever. And so he taught me how to build financial plans. He taught me, we're a fee only, which registered investment advisory here in LA. And I genuinely like talking to people. I like, going out and meeting people. So I built my whole practice, my book of business, by networking. And then, a little bit later, way later on, 2018, I started doing some social media. I just post content that I think is interesting. Like I just talk about things that I find that are interesting or I think could be helpful. So
put a pin on that real quick. Come back to
that. Right. So, so many people, make so many, there's a lot of content out there, and especially with TikTok and all that kind of stuff. I don't do TikTok. I just do Instagram, LinkedIn, Facebook page, professional pages, that with all the archiving for regulation. And I just genuinely try to tell things that I think would be helpful for anybody. And so I've just opened up my own office here I'm still with the firm and going to take over the firm. We're in the buyout process this year. But I was able to build a business underneath Alan and be his succession plan. And man, it's literally I was telling my wife, sometimes you have that imposter syndrome because you're like, geez, if people knew where I came from and what I had to do to support myself and pay my bills to make this dream come true. Where now I'm talking to you guys, I'm sitting on, my Century City office, which was a dream, 12 and a half years ago to ever be able, and so I'm kind of like Rocky. I take a lot of punches, but I can, I've got that good Midwestern work ethic. I can hang in the ring and take some punches. And believe me, I took punches for years.
That should be a source of pride, though, not a source of I don't know what the right word, the opposite of that.
Shame. Right.
Yeah. No shame in that. It's just, it's funny when I'd meet other advisors that were like roughly my age, and I'm going to be 37, just full disclosure there in August. So many douchey people. I couldn't, nobody wanted to talk to me about, like, everybody was so guarded. Like, there was one guy I reached out to on Instagram because I genuinely thought he was an advisor in New York. So he's across the country. Not that we don't have clients everywhere, but I was like, hey, I kind of work alone. My partner's twice my age. Like, he doesn't, obviously on certain things we can relate, but on other things he can't, because he's not trying to grow his business anymore or anything like that. And so, and man, it was just like, I can't have an honest conversation with another advisor because I have yet to meet one that wasn't pretty much just a douchebag. Like, I was trying to get some kind of trade secrets. I was like, it's just nice to talk to someone else that does what, it's in the business. And that, anyway, so it's like a lonely world at the same time. It's kind of refreshing because I'm as much as I like talking to people, I do like being alone in my office and not having to see anybody from time to time. But yeah, it's nice now that, things have paid off, and I'm very grateful and fortunate, and there was definitely luck along the way it came, but I knew I wanted to work in the markets somewhere, but moving to LA really helped me solidify exactly what my role would be.
Why do you think they were so, I guess, guarded around you? Like they're giving up trade secrets. Why do you think that is? Because everybody we've met in this industry so far has been like more than open. Like everybody that we've talked to, as far as like professional traders, seems to want to share as much as they can. Like they love talking about it.
Yeah.
Oh man. Well, obviously I found you guys at the right time because I have been obviously looking in the wrong closet. I don't, your networking events and obviously everybody's trying, I haven't done that stuff in years. Mm-hmm. So I kind of gave up on it. I don't know if you never know, like LA is also a place of, it's a huge, it's like the Willy Wonka. You don't know what people are, what they aren't because everybody's a facade of some sort. Right.
Yeah. Right.
Yeah. So like, I don't know if the advisors I taught, if they were, and again, they were roughly my age, a little younger, a little older, where I think, everyone's trying to put up a front and I that's just not but I don't know, maybe I must have been doing something wrong because you guys are, and I don't talk to like traders that's different. Like, but other advisors that were like at fee based or fee only RIAs and, man, I just, I must have said the wrong things because I just struck out, but I was genuinely like excited to meet people.
Well, to me, that kind of smacks of insecurity. Like you don't want to tell somebody anything if you don't actually know what you're doing, if that makes sense,
It wasn't like, hey, how do you find clients? It's just like, hey, I was like, what kind of CRM do you like to use? Like I use, I use Wealthbox. Like, is there a better one? Like, how do just bouncing ideas back and forth off people. I've hit a wall and I try to, I like to think that I'm a relatively easy person to talk to and open, but anyways, I struck out. So I stopped trying.
Kyle, it might just be the nature of the podcast we do. Like people that hear us and find out about us, like, okay, I want to go on that show.
It's not just us though. I mean, if you look at like Twitter and like some of the people that we've found through there, like they've been open and trying to share. Just it's almost like the trading world is a world where nobody wants to listen to you. How many times have you told someone to sell their crypto at the top or take some profit on something and they just look at you with glassy eyes and
I'm
waiting for it.
I managed to take some profit myself today because we think about our most recent conversation where I was like, I tell people to take profit when they got it, but nobody ever does. I was like, oh damn, take that profit, take it now.
Especially where we're sitting at today. Jeez.
Oh yeah.
Oh my gosh, yes. We'll get into that too.
Right.
Tell me a little bit about the differences between the firm that you're working at now versus the one that you didn't feel like very comfortable working in. Like, I don't want to name any names or anything like that, but like, just what were some of the things that threw you off, and why do you like better about the place you're at now?
Like I said, the owner is dead, so it's okay. Either way. But I won't mention that. But one, it's two different businesses. About 40% of my business is like defined benefit pension plans, 401ks that I run, and then 60% is personal money, families, things like that. And up there it was, we represented companies and did their investor relations, and then also worked through Constellation as basically VC, like getting things funded. It's just that, first of all, that's an entire, those two businesses in and of themselves are entirely different.
Right.
But it's really just, here's what I've always thought I've had an advantage in where I sit today is because you're not going to find another, I would be shocked. I would love to meet him or her, but that another advisor that came from a shop, the investor relations firm, for all better purposes, you could call it a chop shop. You could call the VC was legit. Mm-hmm. They had real money, real backing. But like, I got to see some of the craziest, not fraudulent, but in this industry, like the gray area of how companies are put together, structured, how people are leveraged in, leveraged out. Like the actual, there's like that famous saying, if you ever saw how the spaghetti was made, you might not be so excited to eat it. Kind of like that. Like when you really learn, how do these people make all this money? Like how, they don't seem to, there was just a lot that I didn't like. And there was a lot of, we got paid in stock. Mm-hmm. So there was a natural incentive to, obviously it's just an inborn conflict of interest.
Yeah.
And so it was just an entirely, listen, I'm super grateful for it because I know I got to see some wild stuff and see a portion of the market that the average advisor has no idea about. When you actually see how the sauce is made, how companies are formed,
Right.
Whether you're doing reverse mergers or whatever you're doing. And so it was very beneficial. And it also kind of, I was young. So it's good to kind of get hit with something like that early on in your career, early on in your age, because you really find out who you are. And I was like, at the end of the day, I'm not really making anything, not making a product. I'm not performing a service that is really, it just was kind of hollow.
You create wealth. What do you mean? What do we make? We make money.
We make money, right?
I don't understand the question.
So coming to this side, and it's like, where you get to work as a fiduciary, you work in the best interest of the client, because at the end of the day, that is the boss. The boss is the client. And so if I get fired, it's because either A, I didn't do a good job, or B, someone just couldn't handle, markets or didn't like what I was telling them. That's happened before, where especially in, early April of 2020, when young guys they wanted to sell out of their entire portfolio instead of buying. It's just like, I'm like, I can't help you. That's right. These are some of the dumbest moves I just flat out.
You can't say that, but
no, I did. Yeah, no,
good for you.
I got into it with two clients. One technically, I guess, fired me. The other one I fired. But those were like two of the best learning experiences ever. I can tell you, I know the guys that sold out of their portfolios at Dow 19,320, and probably still haven't gotten in. Or right. The other case was the other guy, and he's like a young guy in tech, so of course he knows everything, that wanted to be all Shopify, all Zoom, because that was what you own, because that was what was. I mean, listen, those stocks were insane, right?
At the time. Where are they at now?
Where is Shopify now? Where's Zoom? What's the other one that turned into basically a penny stock? I forget. But
Peloton.
Oh my God, Peloton. Oh, jeez. So. Those are great learning, and I'll never. It really helped me since you keep learning in this business, because you learn. People say that they have a risk tolerance of a rhino, and when as soon as you get like a 5% downturn, in a 5% day in the market, they're literally ready to throw everything up and put it all into. Shiba Inu or whatever the hell.
Right.
Yeah. You know what I mean? So it's there's some really funny stories in this business of stuff people want to do, and you're like,
I don't think that's a good idea.
Where did you get the confidence that you thought that was a good idea? I mean, but anyway, so it's been a good road.
Do you ever let people make those mistakes just so they can learn from them? Because some people have to screw things up to learn. Tell them you can take 5% of their portfolio and put it in what they think is going to be good, and we'll see what happens.
Oh yeah. So I've got probably, a handful of clients that like and that like to trade. Mm-hmm. And I always encourage that kind of client. I'm like, I'd say 98% of the clients I have, the last thing that they have time or want to learn or deal with is their investments and their assets. And that's great. That's the perfect client. Because I always tell people, I'm like, listen, you're hiring me to do a job. You've already made an assessment whether you think I know what I'm talking about and whether you trust me. So if you're going to hire me, just let me do my job.
Right.
And so, that's why you hire somebody. I like to, whenever I hire somebody, I'm like, listen, I hired you because I believe that I made the right choice until you prove me wrong. And so, so there's a handful of clients, I tell them to keep their trading accounts and do all their, triple leveraged ETFs and short whatever they want, do whatever kind of, whatever they want to do. And that's actually been something I'm really glad I did, because they get to have their fun, make their mistakes, make their money. There's a few clients, I have this girl that's a sweetheart, and she, listen, mm-hmm. I have a Peloton bike, even though my wife's an Apple Fitness Plus trainer. But they don't have a bike. I have their service too, so I can work out. She's not the spin instructor, but I love the Peloton bike, and my client, she loves it. She's like, this is gonna be the future, and this is when it was about 100 and I think 10, 12, somewhere in that range, and
right.
She's like, she's like, she really, really wanted me to buy it, and so I said, okay, listen, fine, we'll buy a little bit in the portfolio, but we're gonna literally I don't know what, $1,000, maybe $2,000 that I think is now
Well, it's at 12 and change, I think, today.
Yeah, like what is it at $12? I think,
Yeah.
And I said, listen, I don't necessarily agree. Oh, another great one is Coinbase. Oh my God, one of my good friends who's a client, her husband's deep into NFTs and crypto. I got nothing, I'm not one of these people, like if you talk to my partner, Alan, he'll tell you it's complete fraud, all of it. Like, that's not my perspective necessarily.
Right.
But I was like, listen, I said, I know your husband wants me to buy Coinbase. This was when it was at 250.
Yeah.
I think it closed at 60, 70. Anyways, so I was like, I know he's not, he watches the portfolios and I haven't added it. And I'm like, but here's the chart. Look at where we're at. Look at the environment with the interest rate environment we're in. Look at, there's stocks that I do love that are in the fintech space that are great companies that are just complete disasters right now because it's not the time for them. They're out of favor.
Right.
So I do let some, anyways, the moral of that story is I bought like $800. I don't know what that was, like 6, 7, 8 shares at the time, whatever the price was. And now it's already down by 40% in like,
never buy an IPO.
8 trading days. Yeah. Never buy an
Unless
IPO.
you're just trying to scalp it. I wouldn't fuck with them.
And yeah, I wouldn't mess with it either. And so I'm like, listen, and I'm like, listen, this is why I'm like, you can lose any money. Look, Amazon's down 25%. Google, the best companies in the world are on discount right now. But I was like, oh, the other one, Robinhood. Oh, God.
Oh,
short that one.
Oh,
I had a client. He's like, I really believe in the long term. I'm like, okay.
Oh, I would have shorted the hell out of that.
So anyways, those are some horror stories. But when I do let people make some mistakes with a very, very, very limited amount, and then on it really turns out to be a good thing because it's like a mosquito bite to their portfolio.
But yeah, and they still get the tuition. They get to pay less than tuition, but still get the same lessons.
Exactly, and their ears perk up a little bit more when I talk to them about things. And listen, I'm not always right. There's some stocks I love that are just demolished, but at the end of the day, they're very real companies that I do think. And whether it's 2, 3, 5, 7, 10 years, I'm not worried about the long term. We just had everything come down in price, but no one's ever. Everybody wants to tell you about their winners and they'll not their losers, and everyone's got some embarrassing story of something they bought.
Of course.
My embarrassing story is SoFi. Oh my God.
Oh.
After using the platform, looking at it, I think they're going to be fine, but man, it is not a stock you wanted to have bought.
no,
nope, not at all.
But when you're buying an individual stock, you limit, especially something like that's on the I'd say cutting edge and definitely brand new. You limit so that even though like it's an embarrassing story of, hey, listen, this has been a train wreck, it's not going to derail anybody's. It's not going to derail a portfolio. It's quite literally a mosquito bite in your sleep kind of thing. So that's how you limit those kinds of disasters.
God damn it! No, I had a question. I forgot it. Shit.
Yeah, you get to start talking about stocks, and boom, it's all out of your head.
I know. That's all I can think about. What stock does he like? Which I bet I can guess.
I know. Listen, from a compliance perspective, I'd much rather tell you about all my losers rather than tell you.
I know, right?
I mean, like, I'll tell you about the ones that I've been shocked by, but my God.
What do you use to guide your investment strategies then, or for picking your entries? Do you focus more on fundamental analysis, or do you combine that with technical? Or
I think you have to have a blend, right? Mm-hmm. Because and I was just having this discussion with my buddy who was a broker, long time. Now he's in venture capital. He has his own firm, but we were talking about this yesterday. We said, okay. He's like, look, we're looking at the S&P. I said, hey, where do you think the bottom is? Everybody wants to know where's the bottom. I said, but we had an open conversation. I said, listen, I got to think maybe 37, 38 is the low on the S&P. And there's some people that, would tell me I'm crazy. Other people, you never, that's a mixture of fundamentals.
I think that's too high.
Yeah. I think it's too high, right? So, and he was like, oh, this, and he was the same boat. He goes, his name's John. He goes, yeah, look, this chart is terrible. And I go, well, at some point, every chart that was terrible eventually turns and it's not terrible unless it goes to zero, which the S&P if it goes to zero, we're going to have other problems and worrying about money.
No, they'll swap out the companies that go to zero.
Right. Exactly. Yeah. So I use a mixture of both, but technical analysis, I was just explaining this to a client, it's kind of like if you're a mechanic, right? So I used to work on cars back when I was a kid and younger and stuff. And let's say you have like an issue with the engine, right? Mm-hmm. And there can be anywhere from 10, 20, 30 different indicators, depending on what you're looking at. Oil pressure, you're looking at the electronics, the pistons, depends on what you're looking at. There's all these different indicators that you can look at, but it's really hard to know if you're looking at the right ones, right? So there's a lot of indicators, but which one is going to be right for this scenario? And it's usually different. And so technical analysis, I think, definitely has a place. And full disclosure, I'm not a technical day trader by any of those means. I lose my shirt over. I don't know how to do that successfully. So that's not my game. But I think you have to be knowledgeable a little bit in the technicals just to avoid some huge blunders. But fundamentally, when you're looking at, it's also right now, we're in an environment where rates are going up. We had that short spurt in 2018, but overall, most, rates have been coming down. They've been at zero. They've been historically low for so long. So Nobody really knows. Even the professionals don't know what really to expect. No, everyone's guessing. At the end of the day, everybody's guessing. Nobody really knows. But, you have to throw that in there. You've got interest rates that are rising. Obviously, you're seeing valuations compress, which is a painful but good thing. Mm-hmm. And so I think you have to do both. And at the end of the day, you got to, the balance sheet, the industry, and you got to, Buffett's whole thing about investing in things is so important. Perfect example of that is look at Palantir.
Right.
I mean, a company like that, I bet you any of these analysts couldn't even really tell you what that company does. And for good reason, because a lot of it's under lock and key.
A lot of it's security, yeah.
But at the end of the day, it's kind of like we just got done watching the Theranos documentary and series. It's like,
that was a good one, wasn't it?
It's, that was a good, unless you know how a business works, like I'm comfortable knowing what's a good example without trying to not getting in trouble for giving a stock pick, but I know how See's Candy works, right? I that's a predictable business. I know how Amazon works. I know how Apple works. I know how, there's a lot of companies. So having investing in what is really, really important. It can always bite you too. My client that his kid was on Robinhood. So he's like, they're the future and this big.
Yeah.
And listen, the story's really, here's the story. Here's the pitch on that. We're going to go through the biggest, we're already started it, and I'm seeing it in my business currently, which is really exciting, but we're seeing the biggest generational gifting of wealth, right? The baby boomers now to our age, right? The transition of wealth. It is going to be the biggest that we've had that we can record, right? Trillions and trillions and trillions of dollars. And so the younger crowd, where they're usually on like Robinhood or one of these other ones, right? So you could really talk like the story, like the bull case on Robinhood. You could be like, well, where do you think all these young millennials and zennials and bicentennials or whatever the hell they're called now, like where do you think they're going to be trading? Do you think they're going to be trading on, TD Ameritrade or Schwab? Well, they're all on these SoFi and these other apps. Like you could really make a bull case for just about anything. And obviously we know how that story turned out.
Yeah. Right.
But
with Robinhood, they kind of shot themselves in the foot.
Yeah.
I knew no one was going to go to jail on that, but
of course not.
This is where, especially knowing how the sauce is made, when that whole story came out and when all that stuff, the halting trading and all this other stuff, I'm like, this is all, that's like the definition of criminal activity and fraud.
Right.
But I was like, there's no chance to anybody,
no
consequences.
No consequences because it would have affected people with very, very deep pockets.
That's why we try to just follow them.
Yeah.
Exactly. Yes. So that's I look at a mixture of both, and I also have a very long-term outlook and just realistic. I mean, you talk to clients now, it's like, where are you going to put your money? You've got real estate where, for example, a client just inherited a property in Van Nuys which is in the San Fernando Valley. It was like a $500,000 dump. The aunt was a hoarder. The house was small, terrible neighborhood. Should have been. They listed it for like $515. It ended up going for like $705 with 25 offers for basically what looks like a meth house.
Wow,
housing has gotten insane lately.
Like, so where are you going to put your money? You're going to go bid on one of these properties? I don't know. Maybe you do that, or where are you going to put your money in? Bonds, where we have an inverse relationship to interest rates, and if you believe what they're saying, interest rates have nowhere to go but up. So then, where do you try to
put it in rubles?
Yeah. The ruble
so low, it can't go down anymore.
It's bound to rebound. It's coming back. It's coming back, Kyle.
Are you guys long the ruble?
No. I don't do any Forex.
Oh my God, Forex. How many scammers do I get Forex scams in my DMs on Instagram? Oh my God. It's always some super hot chick and you're just, and it's the same thing over and over. It's like a portfolio with her next to like a Lamborghini and a Maserati and like wearing next to nothing. And then it's like, take my training program. Oh my God.
I don't think she's actually teaching that course.
That was my inclination as well. That I didn't quite think that was the person sitting behind crunching the numbers. But anyways, it's a wild world out there in the investment landscape.
That's fun though too.
It is fun. It's funny. Anyways.
So tell me a little bit more about the work that you do with the Youth Business Alliance.
Yeah, I stumbled across them 5-6 years ago, and the part of the reason the market's always fascinated me was because my dad worked for Chrysler. He was a mechanical engineer. My mom didn't work, so we were like my dad like middle class Ohio, but like not you could still do it like on one income, but we weren't like rolling in it by any means.
Right.
And so my dad got, he's at a big firm that's still around today. And my dad got the most terrible advice on college savings and college planning. He was basically, because the advisor didn't want him to, I don't know why they didn't start 529s. I really have no idea why. But instead of having him, possibly take or set money aside in another bucket or do some kind of college planning, she had him take out a loan against his retirement. And
man, that's the worst thing you can do.
And unfortunately, my sister spent 6.5 years in school for a 4-year degree. So like,
she's not a doctor?
She's not a doctor. No, she has no medical diploma. So like my dad, by the day he retired, and luckily it's not a catastrophe. I hear the catastrophe story, but luckily by the day he retired, he had finally paid off her loans. But like, or paid off his loan back to his plan. And so I've always had like a chip on my shoulder, like about I do college plan. I don't charge for 529 college planning. We do that for free. That's always going to be pro bono because of what I went through, and I didn't, and my parents, they just didn't know. But the Youth Business Alliance is really, really cool because I can remember being in like high school, and I was fortunate. I went to a Jesuit school where you got to go like your senior year, you'd spend like a week at a different kind of business. Like I went to a dentist's office to shadow. I went to a power plant. I went to,
wow.
They really try to set you up for success. Like, here's some possible careers. Like, what are you interested in? But most kids don't get that. And
I never got that.
Yeah. Right. And so the Youth Business Alliance, they're like, hey, you can be a guest speaker and like go just talk to a classroom of kids. And I coached high school rowing. I love high school kids. I like teaching, obviously rowing, but financial literacy and like, because even grownups that sit in my office, they don't understand.
No,
they're like, oh, we're gonna play the stock market. I'm like, you got to understand, you want to be an owner. You're owners of companies. Like the market prices will do what they do, but you want to own. You don't have to be Steve Jobs or Elon Musk. You can own a, albeit small, part of his business. And like getting to where like kids grow up, they especially with crypto now, they're all into crypto, which is whatever it's going to be. I have no crystal ball on that, but they don't understand like why would you save and why would you start investing and what is investing and everybody's like, oh, it's like a casino, it's like gambling. I'm like, and like grown-ups come in,
it's the house,
right? Like so it's really cool. Like and they go through like they do like charter green dot schools. A few weeks ago, I just did these mock interviews through the YBA, where I went to a school over in Koreatown area, and just like sat there, and the kids come up, they have like a job they're applying for, and you interview them. And like I was telling you guys beforehand, like there were two of the kids I literally wanted to be like, come work for me, like right now. Because like there's just like, there's intangible things people have, and you can see that. And then there's some other kids you're like, well,
the world needs pitch diggers too.
Good luck. You're going to need everything of it. Like you didn't even like this one kid came up, and like I stood up out of the chair, and I was like learning to let them, cause I'm an old school kind of person where like you shake man or woman's hand, and you look them in the eye, and like the way you shake their hand and the way that like it's important, it still matters. And like some of these kids didn't even shake their hand, they just look down, like literally. I'm like, okay, like whatever. But it's really fun getting to go, and they like set up, and you just you go speak whenever you can. So I do it as much as I can, and I put together different things, like and I try to make it fun for them, not like, oh, did you know, like the Sharp ratio, or you don't talk about any of that stuff. You're just like, hey, listen, like things that they use, like Apple's always a really good example, because there's usually, they all have iPhones or whatever, or like trying to get them to understand that you can create a business, you can go work for somebody, you can be an entrepreneur, you can do. I tell a little bit about my story. I'm like, I built a business from quite literally nothing. Like when I first started, I was, I still had to teach fitness classes to pay my rent and pay my bills and stuff. Well, I was trying to convince clients that I was the guy to hire to manage their assets, And so I was like, I went from, I use my mechanic background. So I like to give them like, listen, I was like, I put in a lot of work, and I ate dirt for a long time to get where I'm at today. And that's a good thing. And you don't need to know exactly what you want to do day one, but like, here's some examples, and like, and just teaching them about kind of like career stuff. And because when I grew up, I was like, oh, doctor, lawyer, mechanic, or engineer. That was the three options essentially. And then I was the black sheep in my family, and I disappointed everybody and went none of them.
But you also teach them some financial literacy, and that's something that has been severely lacking in the education system for decades. I don't think it's ever existed, has it?
It hasn't. There was something I saw out of Florida, in fact, and I think they're starting to do.
We talked about that. Yeah,
I have to look more into it, but that's really exciting. And that'd be exciting if that spread to other states, financial literacy.
Just why Florida, out of all the places to do that? Florida's the one that's going to institute like.
I don't know. I was like, well, hey, at least someone's doing it.
Oh, that's how I thought.
But, so yeah, getting to like trying to spark a light in these kids, and like teach them that listen, making money and working really hard is great, but if you do that and you try and explain what inflation is, and trying to explain like, and you really bring it back to like everyday examples. You're like, remember, a gallon of milk, or like, remember when you like candy bars, like all of that stuff I used to be able to buy a candy bar with like 2 quarters.
Right.
You know what I mean? Like I sound ancient, but I'm not that old.
I know, right?
And just like teaching them about companies, and I really try to drill in, because everybody talks, even grown-ups especially, about, oh, we're gonna play the stock market. I'm like, if you want to play the stock market, you're gonna get played. But if you want to own pieces of businesses, and do it strategically, it's not like you can just blindly own whatever. But if you want to be an owner of businesses, and you can do it with as little as 20, you can now with fractional shares. What an advantage! My God.
Oh yeah.
Right.
And so just the financial literacy part, and about savings, and just it's really fun to get up and talk to these kids. And then I always like try to bring like some candy and stuff, and like ask them like random fun questions, about things like, I use the example of like Marvel and Disney, and because all of these kids know Disney, they all know Marvel, and like, how they bought that for basically next to nothing, and look what Marvel is today. And
right.
And I also, talk about the failures and things. I'm like, you're not always gonna win. Just a matter of getting back up again. And so I'm actually going to be headed back I'm from Toledo, Ohio, and the 2 high schools, the one that I went to, and then the one I coached at. I'm going to be doing at least once or twice yearly when I go back, kind of like an investment club. And like anybody,
awesome.
any kids in the school, one's an all boys, the other one's an all girls school. Like, listen, I don't know if there's going to be any interest or if there's going to be lots of interest, but listen, once or twice a year when I'm home visiting, make a date to go in there and literally just talk about, financial literacy and talk about, and now it's like, oh my God, with TikTok and social, anytime I see financial literacy, I'm just waiting for the life insurance agent to be on the other side of it.
Yeah.
And I'm like, that's not financial literacy. That's something else. But it's not that insurance definitely has a part. It's not, but usually it's anyways.
Nobody makes money paying out claims on insurance. Let's just put it that way.
Exactly. And so but the YBA is a fantastic organization, and it was just some guy's vision of like, hey, let's do this, and now it's grown into it makes it so easy for someone like me that's so busy. I can just go onto their website, schedule a school, go in, and now with COVID, schools reopening and stuff because it was on hold for quite a while. Go in and like I'd say maybe out of a room of 30, if you can reach like 3 or 4 kids,
you reach one.
Yeah, even one, right? I'm like, I just, make one to make a difference. And like these mock interviews, like some of these kids, like I'm like, man, I would hire you today. And then some of these kids,
here's a list of stuff to work on.
Right. Yeah. And like you write up, it's really cool because you give them a review, and I hate giving like bad reviews. So I really try to be,
right.
I'm a sensitive person, and but I was like, listen, I always try to find the good things. And I was like, I said, but when you look a man in the eye, or when you meet somebody, look a man or woman in the eye, shake their hand with a firm handshake, and sit up tall. Like, I remember this one, I was like, and then one of the questions of, what's your greatest weakness? This kid goes, well, I'm tired all the time. And I'm like, oh, Jesus.
Wow. No.
Anyway. Yeah, the YBA is fantastic.
Nutrition, check.
Yeah, I'm like, maybe put down the sugar a little bit and eat some vegetables.
Well, I love what you're doing with that, and I hope that you keep doing it, because that's something that Dan and I have talked about quite a bit. And anytime we have guests that try to get back to the educational aspect of it to the younger generation, that makes us smile with pride.
Absolutely.
When I remember when I started this business, and it's like, how to grow a business, and it's like, go volunteer at whatever. And I was like, I don't really align with a lot of these nonprofits. Like, not that they're not doing good work, it just didn't spark like.
No, there's no passion.
I had no passion for a lot of these things. Like I don't. And then I found this one, and I was like, oh, this is something I can go. I'll talk shop, investments, financial literacy to anybody that'll buy me a beer or have me in their school.
Or put you on their show.
Or put me on their show. Exactly.
That's how our business model relies on.
That's what your business model. I got no book to sell, although now you gave me an idea to write one. No book, no pitch. Just, hey, let's talk about stuff that can make a meaningful impact.
Mm-hmm.
And if you can, like I said, if I can walk into a room and one kid or 3 or 4 and it sparks something, I can remember when I was a kid and things sparked for me because someone said something in a way that, just kind of like lit my brain on fire. And so that's my hope. And so if I can be moderately successful at that, I've done something.
You mentioned earlier before we started recording that you have 2 kids now. How old's your oldest?
That's crazy that I have 2 kids. Sometimes I say to my wife, actually probably on a weekly basis, I'm like, can you believe we have kids?
Right.
Somebody let you.
How did this happen?
How did this happen? I have a 2.5-year-old. Her name is Evie, Yvette. And then we just had a baby boy. His name is Luca. And I wish I could give you a better explanation that we named him Luca. It was just off that new movie called Luca, and it's my daughter's favorite movie. And so, yeah, we've got, actually he's 1 month old now. So those 2 kids, and we just got the Social Security card. So I'm going to open up his 529 for him. Yeah.
I did remember reading something that if you put aside, I thought it was something as low as like $2,500 to $4,000, somewhere around that, for a kid in a 401k account at the time of their birth. By the time they hit retirement age, they'll be a millionaire.
Oh yeah. It's kind of remarkable if you just let the world work and innovation work and let time work, over the long term, you can be so incredibly successful. And obviously the earlier you start, the better, but I'd have to look at the compound interest charts too, but it doesn't take.
It was not much. It was less than 5,000.
Yeah. It's not a lot. And you can really, and listen,
if that didn't work, then there's other problems. Money's probably the least of them.
Right. Yeah, exactly. So, I mean, when you have time on your side, and you don't need that much money to really get started and it's just the discipline of, and I remember because as a kid, I never saved any money. I spent, PlayStation, as soon as the PlayStation came out, the new TV, I hid it in my closet. My sister was the saver, but man, if you compound that over the years through good, bad markets, it's extremely powerful.
Do you have any plans of teaching your children financial literacy? Like, what's your game plan?
My biggest issue with that is that I don't want to sound like an asshole, but I want them to grow up. Like, I grew up, like, my dad was a mechanical engineer, but like I was out, we were always working, and we heated our home. Like, I grew up kind of like caveman style. Like, we heated our home with wood. My dad's still like literally I come from a different place. Let me just put it that way. And
good old Midwestern boy.
Yeah, very much. And like, you don't turn the heat on. We burn firewood. Like, and so I grew up, like, my childhood was cutting trees with my dad, splitting, chopping wood, working on like always some project, always some work. Like, it wasn't the typical, and I don't want my kids to grow up that way, because there were parts of that really sucked, but and we're in LA. It's like, it's not going to happen. It's not going to be the same, but I want them as successful as my wife and I have been. And my God, in another 10 years, it's going to be ridiculous. I don't want them to, like, this is the part I haven't figured out. I want them to grow up, and we live in LA, which is a bizarre place to begin with. I want them growing up. I want them to be very centered, very disciplined and hardworking, and not like, because we're going to be able to do some really cool stuff that, like, my parents would have never dreamed of, like that, right. And I want to do those things with them. At the same time, I don't want to grow up with your average LA kid that's a complete douchebag and entitled. You know what I mean? So the financial literacy part, stocks, bonds, savings, inflation, that's the easy part. It's the behavioral part that I really hope I do a good job, because I want them to have a bit of a not chip on their shoulder, maybe like I did, but like, I want them to have an edge. Mm-hmm. And I don't want them, I don't know if you don't
want anything handed to them, I think.
I want them to work for everything. And I want them, not that I won't be there to help them, but I don't want to fail them in that way, because I'm surrounded by kids, in LA, that are just your next disaster cases, because everything's handed to them. They grew up, they have no idea. Like, we live in a bubble here in West LA where there's just so much money literally floating in the air that and a lot of these kids are complete, the suicide rate has skyrocketed with young kids, and social, there's so many challenges. The number part of it is going to be the easy part, the financial literacy part.
Right.
And like, I hope that either my daughter or my son, one day takes over my practice, my business, and but only if this is what really, like, I love this. I'm doing what I should be doing. And if it's their passion and their fire, I'd love for them to come in and, I'm going to put them through it at first, for sure, like I did, because that's really good for you. Mm-hmm. If they want to take over, if they want to do something great, or else, great. But it would be really cool if, like, it could be, if I could leave a legacy and they eventually took this over from me. But if it's not their thing, I certainly would never, I want them to find their own fire.
Right. It took me years to find the thing that I was excited about, which is what we're doing now.
Oh, yeah.
I never really understood that. Like, a job was just where you went to make money, and then you did that, and so that way you can come home and enjoy it.
Right. Well, how long have you guys been doing the podcast now? It's been...
About almost 2 years now at this point.
Oh, fantastic! Yeah, you're at a huge inflection point, because it's like getting to talk about things that matter and spotlight. Everybody's got a different perspective and different way they talk to clients and talk to people. And something my dad told me really early on that's been the best life lesson I think I've ever known is you'll know if someone has any interest in you at all if they're asking you questions, and not like
right.
Obviously this is kind of like a one-sided affair, like you're indulging me with a lot of questions, but like in general, in life and business and things like that, like relationships, friendships, if people give a shit about you or not based on the questions. If they're worried about your health, your wealth, and basically your happiness, and sadly, as I've gotten older, most people don't do that because they don't care.
Most people are just waiting to ask their question.
Yeah.
Like it's just a waiting game for your turn to talk, it seems like.
It's so true, which is, you guys are so natural to talk to. This podcast's already successful. You're going to be unbelievably successful because of your ability to do that. Not too many people can.
43 minutes, Dan. Write that down.
Yeah, dude. All right, now let's talk about me now. Yeah.
Let's talk about you guys, but enough about me. Do you guys have kids, by the way?
I do not. I'm allergic to them.
My wife has 2 that are out of the house now.
Okay.
Although they seem to keep trying to get their way back into the house. I told my dad they're like boomerangs. That's not true. They're good kids.
Yeah, they are. You lucked out.
Mm-hmm. All right. Well, let's. I want to ask you one more thing to leave everybody with.
Sure.
It's on your sheet here. Is one of the questions to ask you, and I have to ask it because it's such a good question. The top financial habits that hold people back and need to be reformed. Can you speak to that from what in your experience has been the thing that holds people back?
Yeah. Wow. Okay. What holds people back? It's really tough to pinpoint that exactly, but what holds people back is, I would put it in kind of a really butchered analogy, which is that the, or metaphor, it's one of the two, I don't know, butcher it myself, but essentially this, people, as far as their investments, they have, it's like you're looking through a zoom glass, like binoculars, and people try to zoom in as intently as they can.
Right.
And because that's what the media, that's what the news, that's what your friends, that's what your family are all telling you to do, and the reality is most people would be so well served if they just zoomed way the hell out and looked at, like, for example, a good example is a client's fear that, they just got a big inheritance and it is a big deal for them and they do need to have it managed right. Otherwise they will have to go back to work. And the fear was, what if we get, and you guys deal with this. I know well, we're on the verge of World War III. What if World War III happens? So, I said, if there's a bunch of, by the ITA, but the reality is, it's like, if you're going to invest, you got to invest in the future, and you are making a bet on the future, hands down. You're making a bet that there will at least be a future, and otherwise, I don't really. But the reality is that there have been much scarier times in history, and we've gotten through. Like, can you imagine? I'm a big World War II buff because all my family was in the armed forces. A lot of my older uncles all fought, whether it was Korea, Vietnam, World War II, my grandparents. Like, this is the nuclear stuff is scary, but at the end of the day, if we all see a bunch of bright lights, there's not going to be anything to worry about.
No.
Right.
So outside of that, which, listen, if it happens, it happens. There is no strategy for that. There is no strategy. But outside of that, the reality is we're living in the best time to be possibly alive in human history, with all the negatives. It's not that I'm not a permabull by any means, but we are living at the greatest time in human history, and I do believe it gets scarier, but it also gets better. I was like, can you imagine, World War II? Can you imagine Korea? Can you imagine the Soviet missile crisis, where they're actually we really were close to nuclear war? Like, there have been such scarier times in history, but we're all programmed to think that this is there's real problems with China, and there's real problems with what's going on in Europe. There's real problems. But the reality is, if you zoom out the lens and look at the technological shift of what's happening.
Yeah, what we're capable of.
And what we're capable of, and you want to be a bear? Like, what are you looking at? Like it's like we're on the verge. The internet's only like, I don't know how old you guys are, but I have a feeling we're somewhere in.
Pretty close.
We're close enough.
Dan just had his birthday yesterday.
That's right.
Oh.
Just hit the big 40.
Happy belated birthday, man.
Oh, thank you.
I get mine in November.
Yeah, so like you guys, we're one of the I tell my wife this, we're one of the last generations that will be able to be like, we knew what it was like before internet.
Yeah.
Right?
Yeah.
Like our kids will never know that. They'll never have an idea. You won't be able to describe what it was like. And listen, in a lot of ways, it was better.
Having a second line in the house, so that way you can use dial-up modem to play the original Warcraft with your neighbor.
Oh my God! Someone calls the house.
When you're arguing with your sibling over who was in what movie, and you have to go to the library or the video store to look it up.
Oh my God! Right? I mean,
everybody had an encyclopedia in the house.
Yeah.
If you wanted to do a project for school, you were at the library because, like that was it. And so I guess it boils down to zoom way the hell out, because if you can't look around and see, listen, we could talk about the bad things till the weekend.
Everybody talks about the bad.
Everyone talks about the bad things. That's really easy because fear. We're much more susceptible to fear than we are optimism. And the reality is, and when you zoom out, my God, it's so exciting. The fact that I can FaceTime my daughter in like almost like I guess it's 4K or whatever it is, to family across the world or back home. Mm-hmm. Anytime I want, and it's free. It's free.
Right. Long distance used to cost money.
I used to, when I have a sister who's actually technically half sister because previous marriage. So she's like 12 years older. She moved to San Francisco. We used to have to write letters, and then I had to get a calling card that was stupid expensive. And I'd watch the minutes on the card, and then so it's you have to really zoom out, because if you can imagine like where things are going to be in 20 years, I mean, I really can't. It's so many things I thought would be like, I didn't really understand when it came out why texting would be a big deal, but that's because you had to hit the same keypad 5 times to or texting pictures, why that would matter. More now I have kids. I'm like, my God, my whole family, or love or hate Facebook and social media. But I got to tell you, one of the greatest things about it is I'm in touch with friends and family that I would have lost complete contact with. Like, so there's like, and those are just like easy examples, but man, you really have to zoom out the lens, because if you look at the negative, it's terrifying and always will be. But the future is so exciting and so bright that you want to own pieces of it. You want to own pieces of it, and not all of it's going to work out. But my God, the pieces that do are going to be so ridiculously exciting that it'll all be worth it.
I've been watching The Wire lately. Just seeing the change in technology from that show was eye-opening.
My wife and I started to try to watch it because I know it's like one of the greatest series of all time. At least that's what we're told. And like we started, this is like 2 years ago, and the first episode, it literally looks like you're watching something from like the 70s.
You see people with pagers. You're like, what the hell?
It looks so old. Like, my God, pagers. Like.
Yeah,
pagers, the computers they're using most of the time they're doing filing, like shit manila folders.
Yeah, exactly. Or like, for example, when the pandemic hit, like they were still in production at Apple. So my wife, would leave every day, and obviously with COVID, we weren't. She's also a nurse at UCLA, and so we were very, she was more panicked about COVID than I was, which was fine. Totally respect, not an issue. But like, we weren't having anybody come in to watch EV. And so I worked from home for 18 months, and it almost drove me insane with a toddler. But like, there's no way you could have ever done that before.
No,
that was not possible. That was not, so like, there's so many the future is very bright, but we're definitely going to have some road bumps.
Yeah.
Sounds like a great spot to leave it.
For sure. Thank you so much, Matthew. This has been a wonderful time. We do hope that you'll come back in the future and hang out with us again.
Before we cut you loose, though, can you tell the people where to find you if they want to learn more?
Yeah, I'm on. I like Instagram's my favorite platform. You can find me at Murawski.mj, MURAWSKI.mj. That's my professional Instagram tag. Goodstein is our website. You can see a big picture of my partner Alan, my assistant Rosie, and myself on there. But I just try to post content that I think is interesting. We have an intern right now that's like 20. I don't know. Yeah, I guess he just turned 20, and he asked me, he's like, I'm just curious on your social media strategy. Like, who's your target audience? I'm like, listen, Michael, that's a very good question, and you are right. And I have no idea how to answer it. Because if you're trying to target younger people, it's not going to work. I'm like, thank you, Michael. I really appreciate the input. I was like, I don't know what to tell you. I don't have a huge following. I just post stuff that I think is interesting and it's working out. But aside from that, I'm not trying to sell you a program or a book or even trying to schedule an appointment. I genuinely enjoy doing it. I genuinely enjoy doing stuff like this. I mean, obviously we're all trying to grow our businesses and all things like that, but I know I should be more targeted and things like that, but that's where people could find me on Instagram is great. I just do stuff that I think is cool, and pertinent, and our website would be fantastic. So.
All right, Dan.
Okay. Thank you again, Matthew. This has really been fantastic. Kyle, you're always fantastic. Thank you again. I know you don't get enough gratitude from me.
Never.
And folks, you're also fantastic. All you listeners out there, we love you. Thanks for making it to the end. Well, we got to shut down the shop for now. We will be back at you soon with another exciting episode. But until then, happy trades.
Bye.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.